The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. Happy new week. Dale is not going to be with us today, as we said today. So far, we've had a quiet day. I know that many of our US viewers will not be with us today. The markets are in general quite calm. We've had the most movement I see around is in the metals complex. And we have also some movement in the um, uh, commodities, some of the commodities, metals especially, um, some of the Asian markets as well, but from the most popular forex pairs, not much to report. I think Blake is already with us, so I'm going to pass it to him. And Greg has promised that he's going to be with us later today. Blaker, are you around, mate?
Steve. Yep.
Good morning, mate.
Good morning. It is a pretty slow session thus far in the FX market. Today we're waiting for Prime Minister May and her Plan B, which should be out, I guess, in like 3 hours. So I think that's probably what the market's going to be waiting for before drifting off into probably a pretty slow session for the most part. But Steve, you sound horrible.
Thank you.
Yep. Hold on. Let's see. Let me just go ahead and tweet something. I'm live going over the FX pairs for the holiday session.
Hey, good morning, guys. I'm here as well, by the way.
Good morning.
Hey, good morning, Stella.
I did see Steve on Saturday evening, and he didn't look at his best. Let me put it that way.
Yeah, I was dressed nicely, but other than that, yeah.
So you were wearing your Sunday best, not looking like your Sunday best.
Saturday, actually, yeah.
But they call it, here in the U.S.
Oh, yeah. You're right.
Sunday best, it's like your church clothes, which so I was thinking, and then this is one thing that I was talking about. I was with, actually, this has nothing to do with the markets, but I was talking with my wife about this because we're obviously the whole lot of us, we're all baptized Greek Orthodox. And for those of you that don't know, I got married in Greece, and that's when I met Steve in person. I didn't meet him then. I met him like years later when my son got baptized about 5 years ago. And so I had to become Greek Orthodox to get married in Athens, or in Greece rather, not in Athens, but in Greece. In Milos, yes. But now church is, obviously if you're Greek, you probably have to be Greek Orthodox, I would assume. Are any other religions really practiced in Greece, or are they shunned upon?
Not really. 95% of the population is Greek Orthodox. We have all the rest of religions are very, very small percentages. Like,
right. I mean,
1% Catholics, 1% Protestants.
Right. So you don't get many people like Greeks that convert to like Buddhism or anything.
Nah, I mean, very, very rare exceptions.
Okay, but you can practice whatever religion you want. Yeah, but it's more of a social. I mean, obviously, it's a social thing. I mean, if you're Greek and you become, let's say, Buddhist, I'm just using that as an example because it's so extreme on the other side of the spectrum. You become Buddhist, you're probably shunned by your family, right? Your family is probably like, "Oh, you're not Greek."
Depends, mate. I mean, yeah, if you live on a mountain on a small village, I'm guessing yes. But if that's the case, anyhow, there is absolutely no chance you're even going to come in contact with the ideas of Buddhism to even consider it. if you live in any of the big cities, and keep in mind that Athens, for example, has half the population of Greece, right? I mean, we're like less than 11 million, and 5 million live in Athens. Another 1 million lives in Thessaloniki, the second biggest city, and another million lives in 3, 4 more cities. So the vast majority of the population lives in cities, and nobody cares. You know what I mean? I mean, it's more or less as it would be in the US. Nobody really cares. I mean, it would sound weird, but who cares?
Yeah. Okay. All right. Just fair enough. I just was I was curious. My wife and I were having this discussion over the weekend, and we're so
like in a small island or in a small village. Yeah, it would be very weird. I mean,
and to their defense, living in a small, I mean, I can't tell you the number of nearly 100-year-old Greek people living in small villages. It's there's something to be said about living that lifestyle for sure. Okay.
I want to ask this, guys. Is this building up to you like praying to God for a position or something? Or
yes, yeah, very much so. That's exactly it. I was like, oh my God, let the euro get to 113.25. It's really what I want. I was discussing this over the weekend on the week ahead video on how I really want to see the euro a little bit lower ahead of the ECB meeting, and we're drifting lower this morning. I mean, we're at lows in the euro. It's not like we've seen a lot of volatility. We actually spiked up to nearly 114, and then we're coming down towards the lows again. But I'm actually looking for the euro to trade a little bit lower because I want to be long the euro going into the ECB meeting. Now, I know that sounds crazy. I know it's probably like, you heard Mario Draghi last week, who's obviously very dovish, and it doesn't seem like there's any hope for euro longs at this point. But I one of the things that I argued or stated over the weekend, I argued, I guess, with myself, is that we do have the Federal Reserve, which is also, for all intents and purposes, at a neutral rate. So, and here we go at euros and new lows for the day. I really would like to see the euro dollar just a little bit lower, and I want to be on the long side. And it's not because I think the euro is going, back to 120. I don't believe that. I actually think that the euro dollar is range bound. But at the same time, we could see Mario Draghi, be a little bit more dovish as expect, but he might also allude to the idea that he's got to normalize policy somewhat, as much as he possibly can, to prepare for the increasing risk of a global economic slowdown. And so I don't think, and if he does, let's say he follows the path of what I'm talking about, the euro could very easily be trading back at 115, 116 going into next week. Again, I'm not sitting here looking at the euro saying, oh man, this thing's going straight to 130. I'm not at this point. But I do think the risks are that, as dovish as Mario Draghi was last week, and the euro slipped from 114.5 to 113.5, we haven't really dropped that far, as far as I would have expected based on the comments that we got from Mario Draghi last week. So I would be pretty hesitant to be on the short side of the euro down here. Now, if we come away from this meeting over the weekend or over the weekend or on Thursday, and it seems like the ECB is gonna, is much closer to starting some sort of new QE program, then we could be trading down at 112. And then, I'll be wrong, but I'm willing to take a shot at it down here, considering we are in a range bound environment. And so that's why I'm hoping that the euro will revisit 113.25, maybe even 113, the figure, before I do want to get long. And because I think by the time Thursday rolls around, we're going to be close to 114 again. So if I had to, draw it out for you guys and gals, what I would be thinking, what I am thinking, let me grab a pen really quick. What I am thinking here is that we might, be here Thursday, and then from Thursday we're either going down here or probably back up here. But if I think we're going to moderate ahead of the ECB meeting, I'm going to take this opportunity to be long down at this dip. And obviously if I'm wrong and I get stopped out for break even, it's just getting stopped out for break even. It's like, okay, well, I can scratch my plan, and I'll be back to square one going into next week. But this is how I plan on trading the euro this week, and that's what my course of action is right now. Now, as far as the cable goes, now today, we are expecting some sort of plan B, and Stelios, you might have a little bit more idea about what's happening with the Bank of England, or excuse me, with Prime Minister May. A lot of people that I've read says, look, she might try to tweak the backstop, but it's not the agreement that the EU agreed to, or it's not the agreement that the EU has already agreed to. So we got plan A and plan B, because obviously we're going to get plan B today. It's probably going to be very similar to her original plan. I don't expect it to deviate too far away from that, because she would have to go seeking approval from the EU, which has already told us that they're not doing anything. They're not going to approve. This is what you see is what you get. So the euro is firming up ahead of this 128 level. So I would be surprised to see us, too much higher following today, unless there's some sort of breakthrough. But politicians always seem to amaze me when we get those, they can pull a rabbit out of their hat pretty well. So
their hat, huh?
Yeah, I was going to say other things, but I said hat.
Politically playing it safe.
Or you pull the gerbil out of your butt. I could have said either or. So, but she's not going to pull a Richard Gere today. So let's. Oh, that's gotta hurt.
I remember that one.
That was. I know. Why would you have a gerbil in your butt? Anyway,
I don't know.
Okay. So anyway, let's talk about.
And we don't want to find out
the rabbit in the hat that Prime Minister May have.
Yeah.
So what's she gonna propose differently today versus what she's already proposed already? I mean, what can she?
Well, first of all, she's supposed to be talking in just over 2 hours from now. I think it's 3:30 UK time. The question is, there's been a lot of talk and rumors and commentary about the backstop and about how they need to put some kind of an end date to it. But and that this is something she really wants to push, but. The EU people, they've said repeatedly, nothing is ever going to change. There's no way. This is the deal. Take it or leave it. And they've been very consistent with this, right? We've had some kind of comments from like the German finance minister or somebody. You have some people hinting that there might be some flexibility, but really, when it comes to Barnier and Juncker and all these people, it's been. This is it. Take it or leave it. And I think May has tried to play a little bit of hardball to negotiate a little bit, but really on the euro side they are firm. So what can she do? The way it looks right now is nothing. You either take it as it is, which is not going to pass. We know that. The UK Parliament will never have it, or try to tweak it. So at the moment, it looks like it's a complete stalemate. And this has been the case for weeks now, right? May has been talking all the time about we're going to negotiate. But look, the European side don't want anything. They don't want to change anything. My personal opinion is that for the reason that I don't trust politicians, I really don't. I think that eventually, when push comes to shove and we're at the last innings, I think they're going to do something. Something's gonna, maybe the UK side is gonna back off a little bit, the EU side is gonna back off a little bit, and I think they're gonna find some way to avoid this huge mess. Because if they don't, it's not only the UK is gonna suffer; it's the EU as well. So my feeling is, because I don't trust politicians, I think they're gonna somehow fudge it in the end. But the way it looks right now, there is no solution. Right?
So when's the end?
Well, 29th of March so far.
Okay. So
unless we
get some kind of a postponement, yeah.
Yeah.
I've been thinking about this for go on. Sorry.
Personally, I've said it in the past. I don't think, Stelio, that the EU is willing to make any more concessions, and the reason is because they have much more to lose than gain. Because at the end of the day, I think that looking at the big picture, what they have in mind is that they do not want to pass the message that if somebody else in the future wants to open the door and leave, that it's going to be an easy way out. They're going to find willing partners to, negotiate the best possible terms, etc. So I do think that there's no disagreement, despite the fact that there will be costs for the EU as well, because there's no disagreement there. I believe that they've already decided that the costs are going to be greater if they make it look easy for whoever is living, in this case, the UK, than the opposite. So I believe they're going to probably hold their stance.
There is one.
Yeah.
Go on. I just wanted to add one thing.
What the UK is going to do. Yeah.
You're right about what you say, but you have to remember that this is not, the UK is not just any country. You can't compare to say, oh, if the UK goes with a good deal, then Portugal is going to want to go, or Greece. It's not the same. We're comparing completely different countries, right? And there's always a flexibility that the EU can have with the UK, potentially, that they will never have with Greece or, Portugal or, whoever else. So just one thing to think about, they, because of the size of the UK, it's like if Germany, for whatever reason, wanted to leave the EU, it would, I know it's not going to happen, but I'm saying that there would be a different kind of negotiations with Germany than there would be with Greece. That's all I'm saying.
That's a good point. It's like, it's if you ask me for something, I'm more likely to give you something, Stelios, than if Steve asked me for something. If Steve asked me for something, I tell him to kiss my butt. Yeah, so exactly. I get it. Okay. So, all right. So thanks, Stelios, for your update on the cable. Now, technically speaking, we pointed this out like a week and a half ago that this 130 level is going to be huge. Even if you follow me on Twitter, it was just going to be, it was a big number. Now, I think that if we can get past 130, it's going to squeeze. Now that you ask yourself, and you have to ask yourself, what's going to be the catalyst that gets us over 130? And I don't, honestly, I don't know what that answer is. I don't know what the catalyst is. I will tell you though, if we get above 130, I wouldn't want to be on the short side anymore. I think that a pretty big squeeze would take place, because if you look at it technically, just politics aside, fundamentals aside, we're divergent on the daily relative strength. Okay. We, you can see price hit new lows, relative strength has continued to build. And that means that it leaves these sellers out here kind of cold. So the risk at this point is if we break through 130, then we are going to start to squeeze. And the squeeze could, quite possibly take us, to maybe the 50% retracement back to 134, just on a squeeze alone. I mean, you do have the 200-day moving average. You have the 38% retracement that you gotta fight through. You got a few technical levels that you have to get through. But I again, if for some reason we make it above 130, and I can't sit here and tell you what those reasons are, other than, the UK Parliament, agrees that Plan A of Theresa May's is the best plan out there. And, if that's the case, then we're going to see probably closer to 140. But again, I don't know what's going to get us above 130 at this point, especially going into today or the next week or two. But there could be something. There is, as Stelios mentioned, there's, you can't really trust politicians. So, what they say is not necessarily what they mean. So there could be something that jumps out and scares the market to just kickstart some sort of squeeze. Remember, traders or the speculative market is still pretty short the cable right now. So there's that as well. Let's take a look at some of these other pairs really quick. So the Aussie, we have later this week, in Australia, you can see we have employment data. I doubt that we're going to really break down here in the Aussie, but you got to think about a couple of things. First of all, in the event that the Australian data is weak, so let's just say it's weak, then you have to understand that we have made a lower high here than that high. So that actually, in my opinion, if the Aussie heads lower from here, it is continuing the downtrend. All right. Now the flip side to that is, let's say the Australian data is great and stocks continue to hold on. We got a bull flag pattern. So I'm not directional in the Aussie at this moment, but that's gonna, how I'm gonna feel about the Aussie is probably gonna change from pretty bullish to pretty bearish, or a little bit more directional after this week. So after this week, I think we'll have a better idea of what we want to do with the Aussie, or at least I'll know what I want to do with the Aussie dollar going into this week. The Kiwi, I think we're range bound. You can see we have a very nice triangle setting up, and I can delete all that. I'm not going to at this moment, but let me delete this one really fast, and I'll put in just keep that channel prominent so we can see it, because you never know, we could revisit that again. That's why I keep that there. But the Kiwi, as far as I'm concerned right now, we're more in a triangle, and if you're bullish the Kiwi, I think you got to keep that in mind, that we're in some sort of consolidation pattern, possibly triangle pattern here, and being on the long side in the low 66 cent level makes a lot of sense, and maybe being on the short side, above 68 cents makes a little bit more sense. And you can obviously see we are smack dab in the middle of the triangle right now. So being directional in this particular pair doesn't make a whole lot of sense at this moment. I heard somebody's mic come on. So did you want to add something?
It's Gregor, mate. He just jumped on.
Oh, Grega. How you doing, buddy?
Hey, mate. So you're
you're
not off.
What's that?
You're not off today, I'm saying.
Oh, no, everybody else is, and I figure I'd get up, and we have our ForexAnalytix team meeting today, and my kids are off today, so I was gonna get up at some point anyway, early. It's not like I was sleeping in, vacationing. So even though Dale isn't here, I figured I'd be around, and I know Steve wasn't feeling 100%. So being here was the most important thing. Obviously, trading wise, we haven't done a whole lot, but maybe you can shed some light on what you think the market's doing. But before you do that, I wanted to talk just about a couple more things really fast. And so just give me 1 second. I want to talk a little bit about the loonie, because the dollar Canadian, as you can see, has been a really, really tight range. I'm still looking at it as a possible bear flag pattern, but this is what's really important about the dollar Canadian in order for it to go down. All right, and this is my conflict. In order for the dollar Canadian to go lower, we need stocks to continue higher. All right, that's my opinion. In order for, we need crude oil to go up, we need stocks to go down, and if that happens, the dollar Canadian is probably gonna break down. The problem that I have at this very moment is I'm not bullish stocks, and that's my biggest issue. As I tweeted to you guys, for those of you that follow me on Twitter, I tweeted on Friday, the S&P really is finding resistance at what I consider a very key resistance level. This is the broken trend line, multi-year broken trend line. We're just retesting the underside. And from a risk reward perspective, if you trade equities, this is the time you want to be short. I'm not saying you're going to be right. I'm just saying from a risk reward perspective, this is the time you want to be short. I think your risk in the S&P is going to be all the way up from 2670 all the way up to 2700, which is this down sloping trend line. And then you got the 200-day just above that as well. But I think between here and 2700, you got to be short. Now, if we get above 2700, that's a different story, because if we get above 2700, now you're talking about quite possibly a move to new highs, and then that really, you know, spells trouble, in my opinion, for the dollar Canadian. But if the dollar Canadian is going to, just kind of ignore this pattern that we're setting up and actually just trade back up into the upper end of the channel, it's going to be as a result of some risk aversion. Whenever the market gets more risk averse, the market tends to sell Canadian dollars, and also at the same time, you tend to get a tick up in volatility. And volatility, the VIX and the dollar Canadian have a pretty tight relationship. I know it hasn't been over years because the VIX has been suppressed for so long, but I think you're going to see that correlation really come into play in the next 12 to 24 months moving forward.
Yeah, it used to be one of the strongest correlations out there.
But it used to be. But when you had volatility suppressed at such low levels for so many years, you lose that correlation. Yeah. So what I think you're going to see here for moving forward is you're going to see this correlation come back. So if you compare it to the dollar CAD, let's see, we'll just add that. You're going to see that correlation really start to tighten up. And actually, let me just make that a line chart just for visual. No. Line. There we go. I think you're going to see this correlation really start to come back in fuego. So as volatility picks up, you're going to see the dollar Canadian start to spike higher. So anyway, I wanted to bring that to your attention because I think that you have to pay very close attention to that. And let me get rid of this secondary chart again. You're going to have to pay attention to the dollar Canadian, to volatility, to equities when you're trading it. And we've kind of dismissed that over the last couple of years. Like I said, suppressed volatility, it just kind of made that correlation go away. But so therefore, let me just reiterate, and then I'm going to pass it over to Greg and see what he's got to offer us today. And you guys are in for a real treat, by the way. Greg Horvat is not only our contributor. For those of you that have ForexAnalytix, the ForexAnalytix package, if you get the full subscription, you get his Elliott wave charts and his ideas. But Greg is also an award-winning analyst. He has, he has his own business that he runs. He trades like a madman, and I'll tell you, he's just a great guy. So you guys are in for a real treat today with Greg here. But before I hand it over to him, I just wanted to just reiterate that with the dollar Canadian, the only way, in my opinion, it goes lower is equities have to really start to break out higher here. Without that, I think the risk of a dollar Canadian bounce back to the high 130s is quite high. So, and I'm not trading this pattern. The only way you're going to see me shorting the dollar Canadian at this point is a break back below 132.50. That's I'm just telling you right now. I have to see the bear flag actually go into full effect before you're not going to see me try to catch the short side of it up here. I'm just not going to do it. I want to see the flag actually break down and stocks break out in order for me to be on the short side of that. And one last thing, I guess I should also talk about that. The dollar MEX is very similar to the dollar Canadian in respect to emerging market currencies. The Canadian probably going to be traded very similarly. So if the dollar MEX will continue to bounce, if stocks continue to stay or start to weaken from here, I think the volatility will put a bid in the US dollar Mexican peso, which has come off very oversold conditions. DSI was very extreme down here late last week, and I think we're pivoting off some pretty key support. Okay, so Greg, what are you looking at today? What do you what's on your radar right now?
Well, I really like the market environment at the moment because what I see is mixed US dollar against the euro and Swiss franc, and also dollar when comparing to commodity currencies. So that's very good for me, because even if you are bullish dollar, you know that maybe then you could be shorting euro dollar. But if you're bearish dollar, then as you pointed yourself, then maybe look at commodity currencies. So based on these correlations, intermarket relationships that we have right now, I think that offers very good potential setups for the next few days, maybe even weeks.
Yeah, you pointed out like the Euro Swiss, or you said the Euro Swiss. Did I catch that right?
No, I said that dollar. If you're bullish dollar, then look for dollar Swiss to the upside or euro dollar.
Yes. Got it. Okay. And just since I've been kind of keeping an eye on the Euro Swiss, I've actually been very close to getting long the last couple of weeks, and I haven't pulled the trigger. I was gonna buy it down here, but a little double bottom setting up here. So which is kind of lends to what you're saying. You could play the euro dollar to the upside, or you can play the dollar Swiss to the upside, or if you really want to just bypass the dollar in general, you can also look at the Euro Swiss as a possible long double bottom down here and pivot off the 618 retracement and previous resistance, current support, blah, 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 all that same stuff. So and now, Greg, what I'll do is I'll pass it over to you so you can show us kind of what you're thinking. Are you ready?
Yeah, sure.
All right, here it comes. You're always ready. I know. So here you go, Greg. And I'm gonna shut my mouth, and we'll hear what you have to say.
Okay, so I will continue to talk about dollar CAD since you covered this quite a lot. Dollar CAD, I think it's really on a long-term scale. I think it's really in a bullish mode, because we clearly made only 3 wave setback from those 2015 highs. But of course, we are in a new short-term or maybe even mid-term pullback that could take us even back to, or I should say below 1.3 level. So for the short-term trader, which is also my style, I'm looking for more dollar CAD weakness. And notice that decline from start of the year was clearly in 5 waves.
Impulsive. Yeah.
Yes. So it should continue to the downside. And it looks like that we should wait a little bit more, because always when I'm tracking corrective waves, such as wave B, wave 2, I will look minimum for a retracement of 38.2%. Of course, ideal is 61.8%, especially from a risk-reward perspective, because invalidation level in such case for your stop loss will be much tighter. So I'm looking and observing the resistance around 1.340, okay, around there, from where we may see a new drop. So that drop would be actually a third leg of decline, which ideally will be wave C or wave 2. So this goes very nicely also in line with crude oil. So if we take a look at crude oil here, we can clearly see that it's an uptrend in progress with room for more upside. In fact, this is still only wave A, first leg of a 3-wave recovery that is unfolding away from these December lows. So there's clearly more downside potential if crude oil remains in this uptrend, at least temporary uptrend, which should unfold an ABC rally. Now, if you recall, Steve, we also discussed about this pattern similarity, if I can call it that way, on crude oil, when we said that this was, I think we discussed about that at the start of December. We said that always since 2007, when crude oil was declining into the year end, okay, then in January or February, crude oil prices recovered. So it was the same.
Support. Yeah.
Yes, it was the same thing here in 2007. So we have seen a declining price action into the year end, into December, and then recovery. It was the same thing in 2009. It was the same thing even in January. Notice that here, January 2014, notice that prices were coming down, and then we have seen a very nice recovery here. It was the same thing here in 2015, January, also very strong decline, and then new cycle has begun, and we have seen new year cycle. And then we have seen again a recovery. 2016 was the same thing, and of course, I was looking for something similar in 2019. So far, we have seen what? Almost 20% rally or so, and it looks like that we are here in a bullish phase, which could lift these prices even higher. So at the same time, dollar CAD could continue lower, deeper in this wave 2. Also, I'm looking at Aussie dollar. As you know, if dollar CAD will continue to the downside, Aussie dollar could recover, right? So on Aussie dollar, again, I'm looking at the only temporary pullback within uptrend, which means I'm expecting here more Aussie strength, more dollar weakness. So now from a trading perspective, you are probably wondering which one you should choose, maybe Aussie or maybe Canadian dollar. And yesterday, I have been looking on correlation or ratio between gold and crude oil, okay? So here we have gold oil ratio, and notice this very nice unfolding 5 waves of decline. So it means that crude oil is doing much better than gold. And if the crude oil is doing much better, then you probably
would expect the CAD to overperform the Aussie in that period of time.
Exactly. So in my case, I want to be dollar CAD short rather than Aussie dollar long. I mean, still Aussie dollar long could also be very good because the price action there is looking still very solid, but from a risk reward perspective, especially if we consider that Aussie dollar has this spike at the new weekly lows far away, especially because of those, from a trading perspective, I mean, you should have, let me take a look, stop loss, more than 300 pips, and that's definitely not my style, especially if we consider that upside can be limited if we are in wave C. So definitely dollar CAD is on my radar screen, and I think it has a very, very clear pattern here. So ideally, we will see more upside. Also, today is Monday. Mondays can be very failure move, especially if you have holiday reversal price action because of holidays in the US. So it can be just a temporary rise. Maybe we get a little bit more upside. So it's a perfect time for this correction to unfold. And then we retrace these gains that we may see today, maybe even tomorrow, and then we reverse at this second part of the week. So this would be a perfect price action for potential drop, especially because crude oil, as I said, is bullish. So Canadian dollar, I think, can be very, very nice.
And Grega, at the same time, I was going over those pairs and crude, etc. on I think it was Friday, and it's also worth noticing that the USD NOK, which we know that it's also very nicely correlated with crude, is also potentially building the right shoulder of a head and shoulders formation here. So, and the rebound in USD NOK also looks so far to be corrective in nature, and I think that it's going to be hard for USD NOK to rebounding further than 862, 863. So USD NOK shows the same direction as well.
Yes, definitely. We can see here clearly 5-wave rally, a completion of 5-wave move from September lows to this high. And as you said yourself, this could be a head and shoulder pattern. So if I label this one very quick here, wave 1, 2, 3, 4, 5. So now we could be setting up an ABC decline. So wave B could find a resistance at the swing high of the previous
863 is perfect. Yeah, there.
Yeah. So of course, this goes very nicely in line with the crude oil and with the markets as well, as you said yourself. So I definitely agree here. But maybe my perspective is that
I still prefer the CAD. I agree with you.
Yes, because I know the personality of Canadian dollar a little bit better because I'm tracking it a lot more often than dollar NOK. So maybe that's probably the reason why.
No, I agree with you. I've already started building a position.
Something is interrupting you, I think.
Do we lose Steve?
Yeah. My cat muted me. Okay, it's okay. my cat muted me. That was nice. So I was saying, Grega, that I was covering the Canadian data on Friday, and because of the Canadian data, I wanted to start building a short position, and I only had a 1 quarter short. And when the Canadian data came out strong, the first thing I said that, damn, I only have a quarter of a position. But then, despite the Canadian data coming strong, the recovery still resumed. So I think I'm going to get, the chance of building a bigger position here. I agree with you. I think the USD CAD is one of the best looking opportunities out there.
Yes, right. And also, that's if you are dollar bearish. If you are dollar bullish, maybe you could look for euro dollar, for example. And it's very good to be flexible here as I said earlier to Blake, that we have this kind of a relationship at the moment on these markets because it really give you a lot of chances to trade actually both sides of the dollar. You just have to be aware of which are the strongest and which are the weakest currencies at the moment. So if we take a look at the euro dollar, what I'm trying to say here is that, and also, as you know, all of traders are looking at the dollar index. We have been talking, as you know, Steve, about this a lot in last year, actually. So a lot of traders are looking at the dollar index. They see dollar index is moving to the upside, but they want to be short dollar everywhere. Long dollar everywhere. But this is not how it works because, as you know, dollar index contains more than 50% of euro dollar. So
58%.
Yeah. So you definitely should consider that this may not work all the time. Okay. So if you're looking at the dollar index but looking to build a position on some pair or cross pair, rather focus on euro dollar rather than any other pair. I mean, pound, it's also these days, it's also very unstable, I should say, can be very volatile. So I would rather stick to euro dollar or maybe dollar Swiss to the long side if you are bullish on dollar index. So looking at the euro dollar here, why I'm bearish is because we clearly unfolded a very slow overlapping recovery contained between these trend lines. So this correction, if it's completed, should be fully retraced. And I think it's completed because this fall can be counted in impulsive fashion in 5 waves. So here we have this 1 hour chart where we can see waves 1, 2, extended wave 3, wave 4, and maybe we go a little bit lower here for wave 5. So my idea is to wait on this correction ABC. Maybe we see it from here, maybe from another low, but my point is just to be patient and wait on ABC to unfold. So resistance in such case, if this current trend line could hold maybe this wave 1 lows, then resistance that I would pay attention on is at 1420, then a little bit higher at 1480 around there. Okay.
Actually,
so,
you weren't here, but the first thing Blake talked about is that he would like to see a recovery of Euro USD, to 114.50 roughly, and then we take it from there. So as it seems, even as a corrective rebound, you're also looking for a recovery to those levels.
Yes, of course.
So I think he's going to get his paper.
Yes, I mean, it's also at very important key level. So this trend line, it's very important at the moment for this.
Channel, actually. It's a channel, yeah.
Yes. So, but sometimes we see a break of this channel. So in such case, I would pay attention to this line as a resistance. Okay, so here is some kind of for the short term, it's some kind of a decision point. Either we see this 1450 or we see a break of 1350 and then we wait a lower pullback. Yes. So but for me, it's important just to wait on ABC. Either we go and we see it from here or after this breakout, and I will have to wait a little bit longer for this pullback to unfold. But the idea is that this is clearly a corrective recovery from November lows, and it should be fully retraced. So I'm looking for a drop towards 1150 or so. This would be my minimum downside potential, but of course.
Greg, what do you think? I know that a lot of people, and you caught one part of the equation right by that long in the DAX. I mean, that was an amazing trade. From a basic technical analysis perspective, I wasn't willing to jump the gun so soon because I wanted to see the completion of the inverted head and shoulders at 11,000 on the DAX. But you killed that by catching it quite early, and we're seeing this wonderful move higher. But the question is, Blake showed before you come in the key resistance area that we found ourselves in the US stocks. I mean, on all the indices that I'm monitoring, the Russell, the Dow, the Nasdaq, the S&P, all of them are at quite an important resistance, and we've already seen some like 14.5% rally in like 16, 17 trading days. What do you make of this? Because I think a lot of people are now perplexed of what's unfolding here.
I mean, a lot of people are either turning very aggressively bearish here for a drop below 2018 levels, or they are turning again bullish, but they already missed quite a big move here. So I think perfect timing because of this fight between bulls and bears. I think it's a perfect timing for a sideways price action, for consolidation, which will or it may confuse some traders or investors. So I think that pullback and that resistance that Blake highlighted, it's very important, and definitely it must be considered, because we also see prices moving higher in wave 5. Okay, but this is very important. I mean, I'm tracking an impulsive price action from these December lows, so I respect the same resistance levels like Blake highlighted, but the difference is that I could see only a 3-wave setback, and then we again continue to the upside. So
in the longer count, you think that those recent lows were actually the end of the equivalent corrective moves?
Unless we go sideways here for some kind of a big wave 4 triangle or something more complex.
Got it.
But the idea is that this is, and we cannot say that it's not, because we clearly see it is only a 3-wave drop. Okay, I know that there are a lot of bearish interpretations. Everyone who see stocks falling very sharply from a new high, they will say it's a new bear market. It's over and over again, and I'm sure you know this as well. Always
and this has ended up being one of the longest bull markets.
Everyone freaks out and want to calling for stock market drop for 30%, 40% or more, but always market surprises and trying to continue higher. So actually, if I just ignore what everyone else says, and if I ignore my own personal opinions, I also think that sooner or later stocks will find a top and the market will see a very big drop. But I have to respect what the market is actually doing, not what I'm thinking it should be done. Okay, so I see only a 3-wave setback, and I see very strong reversal, very strong bounce. So the idea is that even if this is just a temporary bounce, I think it should continue higher, either for a wave C, maybe even for a wave 3. And as Blake said, we are at very important resistance here, around 2,700, around there. And here are important supports that I would pay attention on if we see a pullback. So I think that this resistance could be here only temporary, and that any supports could be actually a very interesting opportunity to catch the upside. I mean, Tesla is also, as you know, it's a lot of in media these days. Those shares of Tesla came down pretty sharply last week. But again, if we will take a look on the bigger picture, you will actually see there a triangle building. So
actually, Tesla has been. I mean, I coincidentally, I was looking at the chart of Tesla on Saturday, and despite all the issues that we had, despite all the outcry for Elon Musk's behavior, etc., despite of all the bearish projections, Tesla has just been chopping around, in essence, near the highs, right?
Yes. So it's where, everyone are trying to trade Tesla based on tweets,
fundamental viewpoint,
or based on news or whatever. But, it's still a very good company. So rather than thinking about their leadership or look how their company is progressing and what they are doing and what is their company goal. So from that perspective, I think that this share has a potential to rise back to new highs. And when looking at the price action, I think the same. I mean, it's a very clear pattern here, and it could be actually a triangle. So last week, actually, when Tesla came down, I think that it can come down only for temporary movement here in a wave E.
The last leg of a triangle.
Yes, then we see those. Of course, there is room for even lower price action, but clearly this is a very sideways price move. It's definitely not a topping pattern here. Okay, so no matter what everyone thinks, I think that there is upside potential, definitely.
Yeah, and I was also looking last week at several of the other big stocks that were the steam engines of the last couple of years growth, and plenty of them seem to have been building some kind of a base at interesting areas of the market, and some of them, despite having suffered some impulsive legs lower, definitely keep looking constructive. For example, I think one of the best examples is Microsoft. I mean, for example, the move lower in Microsoft is very, very clearly corrected, for example, and more of the stocks. I mean, even those that got battered down a lot seem to be rebounding from like 61.8 fibs, etc. Yeah, you can see it there, right? This is clearly...
Yes, it's a perfect pattern. Actually, that was...
Exactly.
What I see here, it was an expanded triangle.
Exactly.
In a way, so actually, yes, it's... I mean, and definitely those stocks are confirming maybe the view of stock market in general. Those single stocks. Of course, they are...
So unless something changes, you are buying risk on dips, if I understand right.
Yes. I mean, and if we take a look at DAX, but let's not go too optimistic on stock market. As I said, maybe it can be just another ABC move, but still with more upside potential here from recent lows on DAX and on the S&P 500. But the idea is that here is a 5-wave recovery, okay? Here I have a DAX. Here is an hourly chart. You can clearly see waves 1, 2, another wave 1, 2, 3, 4, 5. That makes an extended red wave 3. Then you have
an extended 5.
And
an extended 5.
Yes.
Yeah.
So also, what is important, we filled this gap from December. You can see here. Okay. So we filled the gap, and now this gap can be temporary resistance. Maybe there is another high coming, but sooner or later, I think that we will see a deeper pullback. Watch out for potential drop back into this triangle pivot area, and then we again continue higher, either for wave 3 or maybe just temporary for wave C. But if we look at
we also have an inverted head and shoulders target measured, I think, at 11,650, something like that. So that's also an area of interest.
Yes. And also, if we take a look at this monthly chart, I mean, we are still far away from this invalidation level, which is around 8,000. And notice that this fourth wave pullback of a lower degree was quite similar to current pullback of a higher degree. So I think that still it can be an uptrend continuation. Okay.
Okay, and very nice.
And after all, on a daily chart, this is a 3-wave pullback. Of course, it can always unfold into something different, but if we go above this wave A swing low here, which are also marked as a bullish level, this would be just another confirmation, because at the same time we would also break above this wave 4, would be just another confirmation that bulls are really waking up here.
Okay, cool. What is there anything else that's in your radar as a worth mentioning opportunity, or something that you're monitoring that might be close to triggering or something like that?
Maybe I don't know if I have it here.
Yeah, the crosses is a good idea actually, because I know a lot of people are monitoring at the crosses, and they've been quite nice and volatile recently.
Pound cat. I'm looking at pound cat.
Yeah, perfect channel.
Perfect structure. I'm always a little bit cautious when retracement is so deep, like 78.6%. But since we fall back below this, what I call as a confirmation level. So if the previous rise would be bullish, that would be wave 1, wave 2, and you would expect more upside after wave 4. But this bullish count has been invalidated because
we fell into wave 1, which is possible. Yeah.
Yes. This looks quite interesting, at least for another drop to retest this lower side of this channel. And also maybe some small head and shoulders pattern here could be building. So I think that this one could be very interesting. And we said earlier that CAD in general, I mean, it's looking very good actually.
What about Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi? Any of those look good to you?
Euro, okay, I don't have this updated count. but this could be, let me take a look. Maybe this was wave 1, 2, wave 3, 4, maybe wave 5 here. And we see a pullback. Let me take a look at the daily chart. Clearly here, I mean, this reversal is very strong, suggests more weakness. Here I have EuroCAD, also 5 waves on decline here. Maybe small
ending diagonal probably there as a fifth wave.
Yes. But another low could be seen here before we get a reversal. Yeah. But what I'm trying to say is that these pairs could be interesting, but again, after a pullback or sideways price action, not from
So
here.
You would be looking for more downside, but not from here. But the general directions you would be looking for is lower.
Or weakness.
Okay.
And commodity currency is looking strong.
Okay, let me see if we have any questions for you. Euro crosses view, please, Grega. Okay, he already showed us euros, euro, Kiwi, Euro CAD. Please could ask Grega about. Yeah, go ahead. We also have questions for you for CAD yen and Aussie yen, if you can, please.
Okay. So gold, as you know, we are tracking this triangle formation for a while. We are very close to 61.8 projection for wave E. So this is actually 61.8% of wave C. Okay, not of this wave D. So I'm watching these prices here, but it looks like that another leg here to the upside can be coming to complete this 5-wave rise in wave C. Okay, this should be like that. Okay, so this is their 61.8%, and it's also this old swing low here from February, actually from a year back. So it's pretty interesting level. And what I think that another leg higher could be coming is because this decline for now is only in 3 waves. Here was very sharp wave A, and notice that here we haven't seen a move to a new high, but only consolidating, and now we are making just another pullback. And wave 4 is usually more complex or longer in time compared to wave 2, or at least similar. And I'm watching now current price action here at this time. Definitely for today and tomorrow's price action could be very important timing. And also we are here above this trend line support. We are close to 38.2%. So I think that
silver is also almost on support. So, you know, if that
silver is, yes, yeah. And I can take a look at this one as well. So silver is also in the 4th wave here. We retraced quite deeply here, I must admit, 50%, but it's good news for Stelios. We see another leg. It is for short term, but one bad news is that after that leg up, I will be expecting.
Yeah, that's going to be terminal. Yeah. I agree with you. I'm expecting more weakness in the metals as well. I think it's clear that those rebounds are corrective, but you know, in the longer term, I would be very, very bullish on metals, but not yet. I think there is more weakness ahead. Okay. What about Aussie yen and CAD yen that we had our friend ask about?
Okay, so Aussie yen, we have seen here a new low, and this spike clearly, I mean, it's nothing bearish because this whole decline was fully retraced, which means that bears were only temporary. So I'm expecting more upside, but I think that for the next few days, maybe even weeks, we will see a sideways price action. I really don't believe that this type of volatility will continue, especially because we recovered the whole decline that occurred from January 1st. And always when market recovers this decline and retraces back to the gap, it can stay sideways. So I would be looking for maybe even for a pullback, but then another leg to the upside. And if we take a look quickly on dollar yen, which is definitely very important for those cross pairs, notice the dollar yen made the gap here from 110, and we are now retracing back into this gap. So clearly, once this whole decline is fully retraced, I think that we may stay trapped in consolidation. Also, it's you have to be very careful here if you want to be long on those crosses or on dollar yen, because you have to consider that those markets did not recover so much last week when stocks jumped. But we are expecting a pullback on stocks, okay, because resistance is very close. We are in the fifth wave. So I really would not be surprised if this pullback will occur now when we're also feeling that gap on dollar yen. So I think that actually this Japanese yen in general could see more weakness, but after a pullback, not from here. But from a trading perspective, I'm not in favor of those pairs at the moment, because ranges are huge and they are not offering me any clear setups, especially not from a risk-reward perspective.
What about CAD yen?
CAD yen. Okay, CAD yen also here retraced after retesting those lows from 2016. So I think we are just staying in this range, but more upside could be coming after this wave we pull back. But again, I just don't believe that this volatility or this current price will just continue. I think that we will stay sideways.
Okay, interesting.
I mean, I would definitely avoid these pairs.
No, I agree with you. I mean, better opportunities.
They were definitely nice moves. So if you're looking for shorts, you missed your opportunity, because this one was clearly the case through December and at the start of the year. If you were bullish, then you should be looking to buy after this spike. And of course, this is now already behind. So I think that we may easily stay sideways here.
Okay, great. I think we covered all the questions. So unless you have something else that you want to share, we can call it a day, and we'll be back, of course, tomorrow. So is there anything else, Grega, that is in your head? Okay, perfect. Thank you very much, mate. It was, as always, very, very, very constructive having you here. Thank you, mate. Thank you.
Yeah.
Thank you. Blake here? Why don't you close the show?
Okay, yeah, guys and gals. Well, first of all, Grega, thank you so much for being here, because it was your overview of all the markets are it's awesome, especially when you're talking about Elliott waves. I'm not a practitioner of Elliott waves, so getting your ideas and your comments and ideas about, especially about like some of the broader indexes is really important for me. And I hope everybody listening in really enjoyed it. So thank you again.
Thank you, Mike.
All right. And guys and gals, like Steve said, we're going to be back tomorrow in our full capacity with Dale will be here. He's going to have his interviews again. But for those of you here in North America, enjoy the day off for the Martin Luther King holiday. And for those of you that are not in the United States, I hope you have a good day of trading. And and just keep in mind, about 2 hours from now, we should get some sort of news on Prime Minister May and what her ideas for her new plan might be. So we'll be looking for a little bit of cable volatility before the Asian trade kicks off. So you guys have a great day. Thank you so much. Steve, thank you so much. I know you're not feeling well today, so thanks for being here. Stelios, thanks for being here. And everybody have a great and wonderful trading session. We'll see you tomorrow. Thank you.